Hello, XRP community. While trade war headlines dominated the screens, China signaling it doesn't want an all-out tariff fight but won't back down, the US threatening higher duties, something more important for XRP advanced with far less noise. US ETF paperwork around XRP took another step, even as the market focused on a 10-10 sell-off that many called pure manipulation. Tonight, we'll separate theater from throughput, what changed for XRP ETFs, how the 10-10s move may have reset liquidity, and what Monday's US trading session could tell us with stocks open but the bond market closed. Let's start with the macro distraction. Trade rhetoric spiked after talk of tighter controls on critical exports, licensing requirements for rare earth shipments, and retaliatory tariff language. The numbers in the headlines grab attention, but tariffs are negotiated levers, not switches. Markets price fear quickly. Policy takes time. That gap between fear and fact is where institutional positioning happens. Now the tape. The 10-10 cascade looked like a classic liquidity sweep. Thin books, fast stops, and wide intraday ranges that punished late longs and forced deleveraging. Utility names tied to ISO 20022, including XRP, wore a disproportionate share of the damage, which fueled claims of targeted manipulation. Whether you accept the word manipulation or prefer illiquid conditions, the footprint is the same. Large players cleared the runway. When that happens, the question is not who tweeted first. It's which filings moved while everyone stared at candles. Behind the scenes, the ETF drumbeat continued. One track involves converting an existing XRP trust structure into a publicly traded spot ETF, a path that typically requires updated filings, amended language, and market-making commitments to ensure tight spreads. Another track involves fresh amendments from established issuers to update disclosure, creation/redemption mechanics, and surveillance sharing statements. None of this guarantees an immediate launch, but it shortens the runway once agencies are staffed to process the queue. A reality check on timing. A government shutdown slows agency workflows. That means SEC review cycles, banking license processes, and scheduled data releases can slip. Delayed is not denied. Expect windows to slide rather than disappear. That's why Monday's US session matters. Equities are open, the bond market is closed. With bond liquidity offline, equity price discovery does more of the signaling. If equities hold bid while crypto stabilizes, it suggests the 10-10s flush did more to reset leverage than to change the fundamental path. A quick housekeeping note on data. Some macro prints, like CPI and employment series, can be delayed during shutdowns. The absence of data creates a vacuum that headlines fill. Plan for uneven volatility into and out of those rescheduled releases. Markets don't like information gaps. They fill them with risk premia. Back to XRP. The narrative you will hear is simple. While everyone watched tariffs and red candles, institutions prepared the plumbing. ETF conversions and amendments are plumbing. Custody integrations are plumbing. Liquidity commitments are plumbing. When the pipes are ready, incremental approvals quickly translate into deeper order books and cleaner price discovery. That is why down days can coexist with structural progress. Let's address the reset claim directly. A reset is not a magic switch. It's a change in who holds inventory and at what basis. On October 10th, positions transferred from impatient, leveraged hands to balance sheets that can wait. That doesn't mean price rockets tomorrow. It means bounces that stick will be the ones with rising spot volume, stabilizing funding, and exchange balances that shrink into strength rather than swell. If you want a concise, printable ETF map, one-pager, key filing milestones, likely decision windows, and the XRP levels and invalidations that matter, comment ETF map, and we'll prioritize it in the next update. What to watch on a Monday? First, the open. With equities trading and bonds closed, cross-asset signals are noisier than usual. Focus on crypto's own microstructure. Can XRP build a base above recent lows, reclaim key round numbers, and hold them through the session close? Second, derivatives posture. Healthy recoveries feature rising open interest with calm funding. If funding runs hot under obvious resistance, You're looking at a squeeze risk, not a durable trend. Third, exchange balances. Net outflows after weak hours are constructive. Large inflows during strength can cap moves. The China U.S. angle matters longer term because payments are geopolitical. ISO 20022 standardizes the message layer across borders. Liquidity decides who settles efficiently across those borders. XRP's design is to be neutral liquidity, fast, predictable, and programmable. As jurisdictions race to regulate stablecoins, define tokenization playbooks, and integrate real-time rails, the assets that bridge those rails gain share. ETFs, if approved, don't create utility, but they do create battle-tested access that deepens the market for utility to price in. Let's talk risks. Shutdown extensions can drag timelines. Trade rhetoric can intensify. Macro surprises can yank liquidity. None of those invalidate the modernization arc. They stretch it. Build patience into your plan. Define levels ahead of time. Respect invalidations. If we reclaim and defend important handles on rising spot volume, that's your green light. If we revisit lower liquidity pools and find buyers, that could be a healthier base than a forced squeeze. Before we close, here's the bottom line. The loudest story on your feed is not always the most important story for your asset. Tariff theater and 10-10 candles were loud. ETF filings, custody build-outs, and ISO 20022 migration were quiet, and they matter more for XRP's long game. If agencies resume normal cadence and filings are in good order, approvals are a function of process, not sentiment. Price will follow the plumbing. Tell us whether you think the 10-tenths move was a reset or a trap, and list the 3 signals you want us to track daily: levels, funding/open interest, and exchange flows. If you want the ETF map, one-pager, comment ETF map, and we'll publish it in the next update.